Joining us now for the discussion of the U.S.-China trade continues is the CEO of Euro-Pacific Capital, Peter Schiff. Greetings, Peter. Welcome back. There's this late-breaking news, and Cy was getting to it about sort of what's out there. That China has proposed that they would dramatically increase U.S. natural gas and semiconductor imports. They've also agreed that they're willing to buy more soybeans, one of those 10 different commodities that Cy was talking about. How big a deal do you think this is or could be?
Well, I don't think it's going to be much of a big deal. I think that China had probably had intention to buy American soybeans and other agricultural products. We have no idea of knowing whether the Chinese end up buying any more products than they might have bought, even if there wasn't a deal. I mean, we do make some things that Chinese want. Unfortunately, they're things that we grow or harvest. You know, we're almost like a colony of China where we send them raw materials and food, and they send us manufactured goods.
Yeah, it reminds me of something, Peter. Years ago when I was at the Agriculture Department, and I don't know that this is still going on, but it was at one point, to your point, we were sending over birds, chickens, over to China, and they were processing the birds and sending them back to the U.S. So you're precisely right. Again, I don't know if that's occurring, but I thought it was weird then. So, I mean, do you think that in order for this to be like a great deal, to make America great again, that there needs to be more than buying some additional goods, maybe, like you say, just what they were before, but even if they increased it a little bit, is that a great deal, or does it need to be more than that, Peter?
There is not going to be a great deal, although that's not going to stop Donald Trump from touting it as the greatest deal in the history of deals. I have no doubt that whatever is agreed to, Trump is going to say it's a huge win and it's a great deal. But it's really going to be nothing. I mean, it's not going to be any more significant than NAFTA 2, which he called, USMCA. We're not going to make any significant dent in our trade deficit with China or anybody else until the dollar really collapses and prices America out of the import market. I mean, it's actually imports, cheap imports, and foreign credit, foreigners loaning us money so we can keep buying stuff that's been artificially helping to prop up our economy and our standard of living. And ultimately, I think the world is going to cut us off, but it's not going to be until the dollar really plunges. And I think we're headed in that direction now because the Federal Reserve has finally done what I've been saying they were going to do since the beginning, and that is aborted their attempts to normalize interest rates and shrink their balance sheet. But the next step is going to be a return to 0% interest rates and more QE, and that is going to knock the bottom out of the dollar, and that's what's going to ultimately bring down our trade deficits when we're too broke to afford to buy anything.
So it sounds like you, speaking of buying anything, it sounds like you have sort of bought into those Fed notes that sort of make it seem less likely that there'll be an interest rate hike coming up in the next couple of months, right?
Well, no. I mean, we're more likely to get a cut, and I think, we're going to go all the way back to zero, and we're going to start printing more money, but it's not going to stimulate the economy or stimulate bubbles like QE 1, 2, and 3. It's going to be a sedative for the dollar. The dollar is going to tank. Commodity prices are going to rise. I think the cost of living is going up. We're headed for stagflation in the United States. And yes, that's going to bring down our trade deficit, but it's going to be a painful, reduction in our standard of living. And, I think the Chinese and a lot of other countries that have been exporting their surplus consumer goods to the United States, I think they'll be much better off consuming those goods themselves or trading amongst each other so they can enjoy the higher standard of living that they used to help provide to the American consumer, but then they'll be able to enjoy themselves while we're left, to face a diminished standard of living when the chickens finally come home to roost.
Last question, Peter. Do you think that, separate from buying some more goods, that they really need to address the intellectual property theft, those sorts of issues?
Well, look, I mean, that would be great if we could get them to do that. But I mean, I don't see that that's going to happen. I mean, they may play lip service to that, but I don't think that at the end of the day, that's going to change. I mean, a lot of the Chinese economy is benefiting from that. But, I don't think that's the source of America's trade imbalance with China. Because after all, China has trade deficits with a lot of other countries. I mean, they don't have a huge surplus net. They have a big surplus with the United States, and they have trade deficits with a lot of other countries like Japan and Germany. So they don't have any problem having a surplus with China. See, the problem is we're just not competitive in the things that the Chinese want to buy. We have too much government. We have too many regulations. We have too high taxes. And that hasn't changed under Trump. That's why he hasn't made America great again. He's just made deficits greater again.
Peter Schiff, CEO of Euro Pacific Capital. Thank you so much, Peter. Really appreciate your perspective.